Ladies and gentlemen, welcome to Market Matters Media, your one-stop destination for understanding the complexities of the financial world. Today, we embark on a journey back in time, guided by the ominous predictions of Michael Burry. He's dropped a bombshell, and we are here to decipher it. We've covered the alarming parallels between today's economic conditions and those of the 1970s. But what makes Burry so confident that history is repeating itself? Burry has spent countless hours analyzing the economic trends of the 1970s. He's not making predictions based on whims. He's identifying patterns and signs that are hard to ignore. Let's take a closer look at the factors that are driving his concerns and insights. The year is 2023 and the world is gripped by uncertainty. A statewide jobless rate of 9.3% has thrown local unemployment offices into disarray. It's official. Gasless Sundays will become our new reality next month. But this is just the beginning of a story that might take us back to the 1970s. We're all well aware of how history has a knack for repeating itself. Human behavior remains remarkably consistent over the years. Michael Burry has scrutinized the 1970s meticulously, and his findings are unsettling. Let's dig deeper. In the 1970s, life was a nerve-wracking roller coaster. The stock market was in turmoil, halving in just 20 months. Unemployment soared while prices reached unprecedented heights. And this grim reality lingered for a whole decade. It's a bleak prospect, and Burry believes we're heading back in time. First, let's talk about the inflation phenomenon. In recent times, inflation has been a significant topic of discussion. It's become a prevalent concern, with many hoping that it's a temporary issue. However, Burry is not convinced. Inflation, as measured by the Consumer Price Index or CPI, has reached 6.5% year over year. Many believe that as we enter a recession, inflation will naturally begin to fade away. But Burry sees a different path. He's skeptical that this inflation will subside as easily as many expect. The Federal Reserve has raised interest rates, but Burry sees something others don't: a prolonged multi-year recession. The burning question is, what strategy can rescue us from this abyss? There seems to be none in sight. Now let's use a simple analogy to comprehend this situation. Imagine the economy as a bathtub. A full tub signifies robust economic activity. The pandemic led to water levels plummeting, and the Federal Reserve pumped water into the tub. But the water that spilled on the floor symbolizes a hidden danger: money velocity. At the heart of Burry's prediction is a belief in the consistency of human behavior. He insists that history tends to repeat itself because human actions and reactions don't change fundamentally. The lessons of the past are often ignored, leading to cycles of booms and busts. Money velocity is the rate at which each dollar circulates in our economy. Right now, people are holding onto their cash, knowing we are in a recession. But if prices suddenly plummet, people will start buying again, increasing the velocity of money. And that's when things get terrifying. When people aren't spending their money, the economy struggles. A recession makes people cautious, and they cut back on expenses. In theory, this should lead to decreasing inflation, which is what many are hoping for. But here's where the twist lies. If prices drop and money velocity surges, prices may accelerate, causing a second wave of inflation. In the 1970s, even as the Fed shrank the money supply, rising money velocity led to inflation exceeding 14%. The same scenario could be looming. By the way, if you're enjoying this video so far and want to stay updated on financial insights, please consider subscribing to our channel. It helps us continue to bring your valuable content. Let's talk history for a moment. During the Carter presidency, prices skyrocketed while unemployment also climbed. It was an unexpected and challenging situation. Today, a similar predicament is brewing, and Burry's warning is echoing. But the real question is, what can we do about it? Is there a way to prepare for such a scenario? This is where Michael Burry's investment strategies come into play. Burry is not just sounding the alarm. He's also positioning his investments to navigate this uncertainty. So what's his game plan? Burry isn't shorting the market currently because inflation has already peaked, and that's bullish for the market. Instead, he's investing in assets that will thrive in these economic conditions. First, there's gold, a safeguard against currency devaluation. One of Burry's go-to strategies is to invest in assets that act as hedges against inflation and economic uncertainty. In times like these, gold becomes an attractive option. While cryptocurrencies were initially seen as a digital alternative to gold, the recent struggles in the crypto market have shifted the focus back to this precarious metal. Furthermore, companies with high cash flow and low valuations are on Burry's radar. He's particularly interested in Hong Kong stocks, where the valuations seem incredibly attractive. Burry believes that the time for gold is approaching, especially as cryptocurrency scandals have started to merge into contagion. Investors often turn to gold as a store of value when traditional currencies face challenges. Gold has a track record of preserving wealth during economic downturns, and Burry is placing his bets on it. Now let's talk about the Geo Group, a controversial private prison company. Burry believes it's one of those rare gems with substantial cash flow, a low valuation, high debt, and a robust moat. It comprises a significant portion of his portfolio. Burry is also looking at specific stocks with high cash flow yields. This is an interesting move, given that such companies tend to do well during economic contractions. In the current environment, companies that generate significant cash flow are excellent investments. Moreover, the economic contraction combined with inflation makes gold a compelling option. Not to mention, Hong Kong stocks offer incredible value, and cash flow-driven companies are poised for success. But what's truly remarkable is that the buying opportunity for cash cow businesses may be even better now than it was in 2002. Companies are making prudent moves like stock buybacks and reducing debt loads. It's a mathematical equation that seems poised to work out well. What lies ahead? Burry's vision is ominous, but is he right? Do you agree with his investment strategies in these troubled waters? As the market continues to evolve, it's crucial to stay informed and think critically about the road ahead. We hope you found this exploration of Michael Burry's predictions insightful. If you did, please hit the like button and subscribe for more thought-provoking content. Thank you for joining us on this journey, and we'll see you in the next video. Like, subscribe, and stay tuned for more Market Matters Media updates.